What's up, guys? Take Profit Trader here, back at you for another video. I teach you guys how to get into the markets and learn how to get paid. Today we're going to talk about cash money, actual cash, fiat cash, and why cash is a bad investment. If you're stacking bills, you're losing money, and we'll talk about what that means and the inflation rate associated with it. So let's get into it. All right, here we got the DXY. That's the US dollar index. So what we can use this for is a measure of the value of the US dollar relative to the value of the US's most significant trading partners. So let's talk about that. So this is an index is used to measure the value of the dollar against the euro, the Swiss franc, the Japanese yen, Canadian dollar, British pound, and Swedish krona. All right. The value of the index is a fair indication of the dollar's value in the global markets. So this is how we can tell actually how much the dollar is worth. And when we think about the worth of the dollar, we want to keep in mind we've been kind of conditioned to think that the dollar is stable. It's one unit of value. And that's not true. The dollar bounces up and down all over the place. And so that's something we need to keep in mind when we're holding money in our savings account, in our 401ks, stuff like that. We want to be aware of how money is being shifted through its value. All right. So let's talk about it. This is the DXY index, like we mentioned, on February 20th, February 21st. We can see here it's 99.899. So let's write that down. 99.899. All right. Today the value of the dollar is 90.472. 90.472. So let's find out what the percentage change in that is. Okay. $4.72. 99. So this is a decrease of 9.44%. It's almost 10%. 9.5%. And that is just based on 1 year. February 21st to February 2020 to February 22nd, 2021. A 10% drop. Now let's think about that. If let's say every $10 every $100 you have, you actually have $90.44. You've lost 10% so far. So let's say we got 9.4% of a $50,000 salary. That means you lost $47,720 in purchasing value. You're getting paid the same, but you're able to buy $5,000 less almost from 1 year ago today. All right. So that's the value decrease with the dollar. Now let's look at something like Bitcoin. Bitcoin is flying right now. Bitcoin has a positive inflationary rate. So that means Bitcoin is constantly moving up and purchasing value. So at one point, let's look at this. Bitcoin 1 year ago was at $10,000. It is currently at $56,000. So the purchasing value of that Bitcoin has gone up significantly. And let's find that out. Percentage change. Our new number is 56,494. Let's go to our old number. go 107 or 1,079 or 10,079. That's an increase of 460%. So Bitcoin is actually compounding its interest or compounding its value. In 1 year, it's gone up 460%. And that is why cash is trash. The value of the cash you have is significantly dropping compared to other investments that you may have. Even if you have stocks in the stock market, if that stock is $800 is worth $800, but it goes down, but the dollar goes down 10%, that stock is only worth $720. If the dollar keeps going down, that starts to become a problem. Now remember, back in the day, there used to during the Depression, people have had wheelbarrows full of cash and they couldn't purchase bread. Why? Because the purchasing value of the dollar went to nothing. So keep in mind, if you're stacking bills, if you're putting cash into a savings account, that's a bad investment. What you want to do is put it into some crypto currencies, put it into some real estate, something like that that's going to increase in purchasing value, not just be based off the dollar value, USD value. That's something we want to keep in mind.